All right, folks, welcome back. This is our Monday commentary for the ICT mentorship. And we are looking at the dollar index daily chart. All right, so I finally got my objective of 104. So that was, in my opinion, a moral victory. Okay, so we did come back into that imbalance here I mentioned before, and we rallied higher. Even though we have these wicks, that to me doesn't really indicate much at all. This could still go higher, and foreign currency could still go lower. That's what I'm expecting. I'm going to stick with that narrative until proven otherwise. On the hourly chart, you can see how we came down into this balanced price range. Okay, so now on your notes, this is something for balanced price ranges. We have the one single candle here, the one single candle here. And if price is above an area like this and it comes down, you're going to want to refer to the highest area, like this one begins at this candle's low and starts going down, where this one starts here, in between here. So this candle's lower than that one. You want to refer to the highest one here, because we're above it coming down in. So it may not come all the way into this area here, but it can come into this area. So it's treating this area, like I mentioned before, it's like an island reversal. So the sensitivity, kind of like an imbalance, is going to be whichever one's higher when the price is above. So if market price is above the balanced price range, you're looking at both of these areas here, a single candle pass here and a single candle pass here. So this balanced price range, you want to find its beginning point. Its origin is here. So you draw that out in time, you see that price is sensitive to that. Now, it could have very easily gone down into this, but it's more important to watch the higher one when market price is above and trading back down into it, treating this as an island reversal. Then the market rallies higher, runs for buy-side liquidity, and then gives a nice little pattern I've been teaching on the model on YouTube. Here, short-term low, displacement, comes back up in, takes out the low here. Really, really nice with an imbalance. All right, with that idea here, okay, we took out an old high, we broke down, displacement, trades back up into the imbalance here, aim for the sell side liquidity here, breaks lower. That is a buy for foreign currency. So for an intraday trade, that's a buy for like euro and cable. We'll look at that now. All right, so here's the daily chart for euro dollar. Consolidating still, just a really awful little trading range it's stuck in. Downside objective still remains that for me. Can it pump up here a little bit and then trade lower? It can. I'd rather it didn't do that. All right, here is the trading range that I've been telling you about, why I'm not interested in euro. Imbalance, we traded up into that, worked lower on Friday. Then we traded down into today's low, rallied, small little fair value gap. At the same time that that dollar index was giving that YouTube model short, where it traded up into its fair value gap, it's trading here in the euro to its discount fair value gap there after a short-term market structure shift there. And highest up close candle, we'll look at that on the 15-minute time frame as a rejection block as a target. And you can see that here. Not this one here, this one. So inside of all this movement here, the highest up close is the rejection block. Draw that out in time, it hits it. Buy side imbalance, sell side inefficiency. Trades down into that with the order block here. Hits it, rallies, buy side, and then the rejection block. And trades into consolidation going into the close. Pound dollar. Okay, you can see just a little bit indecisive in here. Traded back up into our old imbalance. Again, go back and look at your notes as to what this shaded area is. Trade up into it here after taking the sell side here. And on the 50-minute time frame, much like we mentioned on the euro, at the moment that the dollar index traded up into its premium fair value gap, looking for an intraday correction lower, buy side, ran into it here and back into that old imbalance. Here we have an imbalance there, buy side imbalance, sell side inefficiency, old high, discount array, trades into it, rallies back up into an old imbalance here, and then consolidated. So the better trade actually was in euro. It was a little bit cleaner, but still offered a nice little run in here. So it's not that bad. What is that, like 10, 20, 30, 40, well, it's 50 to 70 pips right there. That's a one shot, one kill. All right, S&P E-mini futures. This is the continuous front month contract posting by TradingView. So in other words, if you put up ES and hit enter, it'll pull up the continuous contract. So it's always taking the front month and adding it to whatever the charts posted. You can see we have indeed worked into our May seasonal tendency. It has traded lower into this actual gap and imbalance here. Now we have a small one right in here. I'm going to leave that unshaded because I want to keep it for you to go into your own charts and do that. So you want to annotate this candle's high and this candle's low and extend that out with a shaded area, kind of like this one here. That's the next downside objective. Should we continue lower? We have a volume imbalance in here. Just be mindful of that. I don't want to see it come back up here before going down here. Okay, I like to see it go down there first, and then if it wants to come back up, then it's fine. But in here, it just remains extremely heavy after a gap opening lower on Sunday. All right, here is Sunday's gap opening here, and we had one little pump back up into it, like on a 1 minute chart, and it gave up the ghost and just worked lower from there. Just remained heavy the entire course of Monday's trading into that shaded area. Sunday's gap opening. You can see we bump up it here. Right, you see that candle here at the opening gets bumped right there and trades aggressively lower. Comes back up into a retracement, breaks again, remains heavy. One return back into old lows, breaks lower, kind of sloppy in here. It's a little rough if you were working in that range. Small little imbalance here for the afternoon session. Really nice sell-off there. In my mind, that's the cleanest price action there. So a short-term high, imbalance, trades back up into it here, relative equal lows. Prior to this drop down, they dig into the deeper end or discount low of that shaded green area. And that has been shown to you in the daily chart. All right, and finally, as you can see, I've been asked a lot on the comment sections in the YouTube channel. So they're asking, like, can you do a commentary on Bitcoin? And I hate doing it because I don't know that much about this thing. But when it gives certain conditions and characteristics, I'm okay with going out on a limb and saying, this is what I think is going to happen. But I hate when I'm asked that because I don't want to be pushed into that arena because I don't know it well. I don't have a good feeling for it. I don't have any experience trading it. And if I don't have any experience trading with real money, why would you want to know what my opinion is about it, frankly? I have never really tested my own ability or my concepts personally in it, so I don't want to do that. Okay, I've never gotten past paper trading or demo trading with it. And I haven't really done that much that shows me consistency, so I'm not interested in it. So anyway, I talked that on the community tab 3 days ago or so, mentioning that 28,000 was likely, and it's based on over here we have the relative equal lows. In the last 3 days, we've really come off the range in here. And what I was working off of is the fact that we had already traded into the consequent encroachment of this candle here. And I was treating that as like a premium array because we had already worked below it there. So I'm thinking, okay, well, if it comes back up into that area around the 36,000, it could peel off and go lower, attacking the sell side below here and attack the sell side over here. And today it really gave up the ghost. I mean, it was coming down really nice. Does it have the continuation to go back into the 28s and lower? I don't know, folks. But to me, it just makes sense that this is where it's likely to go. Okay, so there it is. I mentioned earlier in the year that it was likely to go here. And they consolidated it, came up, took out the buy stops here, and then all of a sudden we're dropping lower. So if you strip this down to a market maker sell model, we have distribution here and second stage distribution for another swing lower. And the aggressive decline is being seen here. So I'm thinking it should have no problem getting below that 28,000. Does it accelerate down into like 15,000, 14,000, 12,000, maybe even return back to and below 10,000? I don't know, folks. To me personally, I don't think this thing warrants being where it's at price-wise, you know? So I called 62,000. That was about as far as I could see it going. I was wrong. It went to like 60. I don't know what that is. Is that 69? Did it get to 69,000? I don't know. But it went above 68,000, it looks like here. If not, I fell real short of it. And then hasn't really been able to muster any kind of a rally beyond that. So anyway, I toss it out there when I feel like I have a clue. And it's not that often that I do. So anyway, if it goes down there and it goes 28,000, who cares? It doesn't mean I'm right. It doesn't mean I'm smart. It doesn't mean I know Bitcoin or crypto. It doesn't mean I'm, going to start doing it more often. It's just, if I feel the unction to say it, I'll say it. But if I don't, I'm going to stay quiet, folks. All right. So anyway, I gave you some homework in April. I told you to create a demo account or paper trading account with the TradingView account, or platform rather. And I mentioned that we would give you a homework assignment of taking a $100,000 paper trading account and then drop it down 25% and to spend the rest of the month trying to get that back to 100,000. I'm going to create a thread in the forum. As soon as this video posts, I'm going to create the thread in the forum. So that way it'll be everyone's opportunity in your user group to go in and show what you contended with psychologically. What did it feel like? Was it easy for you? Was it impossible for you? Did you feel rushed? Did you try to do it too quickly? Did you try to do it, at your own pace and able to do it? What asset classes did you use? What did you focus on? I want to have that kind of like, I want to create a discussion in your forum in each one of your user groups. That way we can get a feel for what everyone did. Now, I know some of you just didn't do anything with it because you just didn't do it. There's some people in here that will not ever really engage, and they're going to get the results that they asked for by not doing those types of things. But in your user group, you'll see a thread in the forum, and it'll be 25% drawdown exercise. Okay, and it'll be everyone's opportunity to go in there and share what they were able to do, what they were unable to do, and then we'll use that as a discussion point for the rest of this month and how we can tackle those types of things, should it, and it will eventually come into your trading. Now, does it mean you'll drop down 25%? No, it just means that if you have a pretty sizable drawdown, how do you go about doing it? How should you approach it when you're trading with your paper trading account or your demo account? I have to say those things for compliance reasons, but the concepts and the procedures and processes remain the same whether it's demo or a paper trading account. And that, my friends, is going to be it. I apologize for being late today. It has been a hectic day. I've been getting slammed with emails because of the two-stage authorization. If you're obviously getting this post in your email, it'll show in their instructions. All you have to do is clear your browser history, cookies, and reboot your computer, and that way it won't ask for the two-step authorization. We did that while we were working on the forum to get things shored up a little bit, and there it is. And that will be it for tonight. I will touch base with you tomorrow. I am working on the price action model algorithmic lessons for the models. So my focus is trying to get those done, so that way the last week we'll have that, and you'll have access to the links that are missing between 2017 and 2018. And I think that'll be it. But anyway, I'll touch base with you obviously on midweek review on Wednesday, and then Lord willing, if I give a video up on YouTube Tuesday, then obviously you'll hear me jawboning there too. Okay? So until I talk to you next time, be safe.